Good weekend, all. Ira Epstein with your SPDR ETF wrap-up. And this is your weekly edition for Sunday, and we are the 15th of May, 2022. An interesting week, right? So normally I was covering Rivian for you, as you know, on the daily charts, but I cannot do that on the weeklies. I can't get a 200-week moving average, a 100-week. It hasn't been around long enough. Now, I am watching how Ford has dropped a lot of that, but I do think there's value down here. And as long as they keep Amazon wanting those trucks, I'm betting this thing turns itself around. Now, going down from $180 a share to $20 is a heck of a ride, but what can I tell you? The trend was down. It was easy to see. If you hung in there, you hung in there. It's almost like ARK. I don't get it why people keep investing with Cathie Woods. I mean, let's face it. If you look at how much she's down, she's beating the averages, right, to the downside. But people get hooked. I'm still looking at AMD. I just didn't change this because I think the semiconductors have some value down here. If the market can clear here, this is the number that I'm looking at, 99.69. It'll break the pattern of lower highs, lower lows. Until it does it, you haven't done anything. Breaking the pattern's important. I want to come back here also. 84.02 was the low of this week. You had a rally, came down to 83.27, and you're getting potentially an area that can clear there. It will not give you a buy signal. It'll give you don't want to be short signal. Why? You'd have a lower low, higher high. When I look at moving averages, the battleground is clear. It is the 100-week moving averages along with the lower Bollinger Band. So this whole zone is where the market's trying to find some footing. Footing is all that I'm labeling it. It is not the beginning of a bull market. It could be the end of a bear play on the market. And as you can see, momentum, which has been embedded, could lift out of that this week. Any closing over 21 by Friday. Last 2 minutes of trade projects getting to 108.04. It could even be there before that happens if you had a big rally this week. When we take a look at KBE, another market that I think the pros are covering their shorts on, this bank index. You're down, you've come to the 100-week, the lower Bollinger Band, the 200. What are you looking for? I mean, if you go back and you look at the 200-week, so far it hasn't been violated. You haven't come down to challenge it again. It could go lower. You're embedded. I am certainly not screaming buy. But I am saying I think the pros will wait to sell rallies now that you have an embedded reading on the weekly. They won't sell this break into the major support. In XLI, momentum down on the slow stochastic, trend down. Again, you hit where I think the pros are doing some short covering. That combination of the 100-week and lower Bollinger Band, which begs me to explain. Covering shorts is not the same thing as going long. None of these markets, while I'm saying that I expect the pros to cover shorts, not once are you hearing me say they're going to buy. Covering a short is buying to end a down play, but not the beginning of an up play because maybe you think you can sell it better. Again, in the energy sector, you had this one break. Let me come to it here. You got out of the embedded reading on a weekly basis when you fell there, and the objective becomes the 18-week moving average of closes, and lo and behold, that number 7101, you went to 7100. That's all it's worth. Yes, it can get more downside. You never know. The trap, and yes, with embedded readings, 1 day or 1 week can be a trap, depending how you're looking at a daily chart, weekly chart. It could be an intraday chart. If the market comes right back on the next bar and re-embeds by both numbers getting over 80 again, game over. You've caught the bears. And watch out, you're probably going back to the upper Bollinger Band. I would not be surprised on that. On SPY, in fact, all the stock indices, you're now down to some key numbers. Here you're down to the 100-week and the Bollinger Band. That does not mean you can't open the door to get down to 346, but it does mean on this leg of the break, you're not embedded. I think the pros are stepping out. I think they began it 3 weeks ago. And I think they're still stepping out of shorts, not buying long. GLD, you have a higher high and a lower low. Could the market be headed to 165.54? There's nothing to stop it from doing that. You're not in a trend. You have a higher high, lower low, momentum down and bias down. The gold miners, this is a cover short area. Now, if you're one of my subscribers, you got to be jumping up and down. We were talking selling gold, right? And we were talking selling the gold miners, and bang. Now they're down to the areas where maybe it's time to take your money off the table. ARK. Reading the articles over the weekend, how people are plowing more money into it. I guess you want to throw good after bad. I mean, this was 159.70. It's down here. There are legions of followers to what she wants to do. Those same legions, if they've just held on, have lost what percentage of their wealth? 70%? So what they're saying is this is a good spot to double down. Maybe. That's all I can say. It's a Bollinger Band. I think it's a spot where you cover shorts. I'll be more enthralled for you people that just follow her blindly. If you lose the embedded reading, you get a move over 21. Then at least I can argue maybe you get to 62. That would be a big jump in this stock. That would be almost, what, a 50% gain. So that I can understand, but you're not there yet. In Amazon, this is taking a heck of a beating. So is this a staple? I've always wondered, when you say people have to own Kleenex, people have to buy detergents, think of what you buy. Whether the price goes up or down, you're buying your soap, right? So you get things like that. Well, did the way of shopping change enough where people are back in the stores and Amazon's not that staple? Just a thought process. I don't know, but it's still bearish. Apple's still bearish. I told you I believe nothing China ever says. I think China just says what they want to say for the world markets, but they do a different thing and nobody's there to criticize them. You shut down 23 cities with zero tolerance, but they told us everything having to do with Foxconn, other companies like that to build Apple phones, that was open, people can go to work. Sure they could. No public transportation to take them, nowhere to grab food because everything was shut down, zero tolerance. Apple comes out with the real story, how their sales are getting hurt and hurt bad, not because of demand for their products, they don't have the products, and away you come down. There'll be an end to that story too, and we know that people want to buy, come September, if it can come out, the Apple 14. I believe it'll be a monster. Why? Because only the last changes have been tweaks. This could be a new type of phone, and that's what I'm counting on for them. But there's no reason to be a buyer on the stock at this point. And in Tesla, well, the folly of buying this Twitter is very evident. You've taken a stock down in very quick order, 2 months, from 111.53, and I'm not saying the market as a whole wasn't going down too, but you got this week to 680. So you've done an effective job of dropping it almost 40%. I mean, that's a heck of a drop to get. I saw that Musk could be in trouble because of a tweet where the sample that apparently was done to find out how many spammers there were in Twitter, they used, if it's true, 100 people. I don't understand how he did that. He signed away his due diligence. They did 100 samplings, and you're going to take that and extrapolate it? There's something I just don't get with all this. But in any case, Twitter needs him to buy the company. So they can go all they want. This is about lowering the price. He overpaid. This is about lowering it, and then everything maybe can straighten out. It didn't help Tesla either. Then everything in China is down dramatically. He can't get his cars built either. But as I said, if Shanghai's coming out, well, what about all these other cities? We don't get enough information to know, and information we can believe. That is the second part. Twitter, well, from the price of $54.20, it's now at $40.72. I was telling traders that I said, if you're going to buy it, you have to cover it with option strategies. This is probably the zone where they're going to lift those option strategies and take the rest of the gamble. The insurance you could have got out of them is probably over and done with, is what I'm suspecting. While the trend is down, the bias is still up, and you're into key support areas. Doesn't mean you can't go lower. You can see the correction there, but you got to take your shots where you take your shots. TLT, this is still very bearish. Look at how the market keeps riding it down with an embedded reading. So yes, you're going to get bounces along the way on the interest rate futures as people get scared and they buy safe havens. Did that change anything? This chart's bearish as can be. Until it loses this reading, I won't change my mind. Lose it, lose the embedded reading, I'll be a different person here with you. And that brings up what I give you in the mornings. Remember, what you're looking at here intentionally, this arm's behind my back. You don't get the window envelopes, the other moving averages that I use. You don't get the explanation of the trade. You don't get the trade setups that I want you to do in a certain way with a specific buy here, sell there. I start you off there in the morning news with what? What went on in Asia, what went on in Europe, America, other events taking place. I bring it all together to you in these type of events. And remember, your SPDR ETFs are based on futures. You want to know what they're doing. TLT, SPY, DIA, they all care about it. GLD's looking at the futures contracts. It doesn't set the tone, so I cover those for you. I do that at 5:30 in the morning, and then at 9, I start recording for the ETF because by then the government reports in the U.S. are out. The algorithms have entered the market, and away you go. You owe it to yourself to give it a try. That's all. You don't have to like it. You don't have to stay with it. To do so, just go to our website under the word research, or you can follow my finger, take your cursor, if you're on a computer screen, move it up here. You will see the icon, click it. Everything is explained there. No obligation on your part. I'm Ira Epstein. You have a great day. Take advantage of learning more. You have a good one. This is a fun markets to trade. Take care.